All right, crude oil triggers a one-day bullish reversal of a hammer bottom, potentially, but it remains to be seen whether it will hold. Before we go further, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find the link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for crude oil. So crude oil hit the 88.6% retracement of this full upswing. This 88.6 here is from this upswing, this second low to high. This is from the trend low to high, and therefore potentially more significant level. And that was hit almost exactly today with the low of the day of 56.41. 56.38 is the 88.6, close enough given the reaction. And today, because we had a two-day breakout, and specifically a breakout of this bull hammer candlestick pattern, a daily close above yesterday's high will confirm the one-day breakout, 57.90. And it remains to be seen whether that is going to happen or not. You could see that today's high of 58.51 found resistance at the bottom of this previous potentially bullish falling wedge that I was looking at before, until we had this breakdown, which failed the wedge. But it does recognize the line nevertheless. It doesn't matter at this point that it was a wedge, but just so you can understand why that line is there a little bit better. So that is showing it as resistance. And this prior low, after a very sharp decline, also at the 88.6% Fibonacci retracement, was also resistance. So support becomes resistance, support of the line becomes resistance. Those are short-term bearish. And so you don't see strong bullish momentum kicking in yet, because you're still seeing signs of resistance, like I just pointed out. So where does this put us? This is like a falling wedge. It has similar types of price action, to the point where we could look at a bull breakout. So we already had a bull breakout of the line today. That means that today's high is a key price level, 58.51, because a breakout above there triggers a more clear breakout, putting this high here as a target, 60.28, and this prior low of 60.64, which may be now resistance, was also the 78.6% retracement, and the 20 moving average is dynamic potential resistance and falling currently at 61.04. So it's getting close to that price level. So the 20 moving average, we could say, is the initial upside for any type of a rally, in my opinion, followed by the 50 moving average at 62.70 currently. But the first line of defense here is this 10-period moving average, and a daily close above that will be the next clear bullish indication. 59.03 is where it's at currently. We do have a higher daily high and higher daily low here as well, so that's also a small bullish sign. But a lot of resistance to get through. But once that happens, the other side of this channel, basically, because if I take this line, well, that won't be an actual channel, but nevertheless, the top line is a potential target on the upside if it does get going. All right, that is it for crude oil traders. Have a great week.